Crude oil is in a bear market. The Keystone XL pipeline facing yet another hurdle south of the border. This is two pieces of news that Canada's beleaguered energy industry does not want to hear right now. And as these challenges pile up for the oil patch, so do concerns about attracting capital. Joining us now to weigh the investment sentiment is Dundas, CEO of Enerplus. Thanks for joining us, Ian.
Good afternoon.
So you're out with earnings. The street is happy with what they're seeing from Enerplus right now. It was a strong quarter. At the same time, this is a tough environment, and clearly from the news today, getting it tougher to operate in. How are you handling it?
Yeah, it's been difficult for a lot of companies, a lot of investors. I mean, I suppose the keys to our strategy over the years have been to maintain a strong balance sheet, to get ourselves exposed to projects that had really powerful economics. And so over the years, we sort of transitioned our business to be very, very focused. And so our company today, I don't know if everyone sort of appreciates that about 90% of our production, our cash flow, our projects, it's all being focused in the United States. And as difficult as it is for a lot of companies, things are going pretty well for us right now.
Now that's telling the fact that you have that much of your focus on the United States. When did you start making those moves, and was it a conscious one to say we need to limit our exposure to Canada given what's happening here?
You know, the company's 32 years in the making. We're one of the original. It was a royalty trust at one point out of Canada. We stuck our toe into the U.S. market in 2005, actually, and it wasn't an anti-Canada call at that time. It was actually almost the opposite of it. Canada was so bullish and so robust. We had difficulty seeing how we could make a lot of money here, and so that took us to the United States. You know, over time, it's just been easier and easier to increase our U.S. investment. I mean, some of that's geology. You know, we are quite focused on oil projects, and we found more of those in the U.S., so that was a bit of it. But the policy overlay has been incredible. You look at it now, and it's very stark, and I think people are appreciating what advantages exist in the United States. But it was a series of decisions over time that collectively put us in the place where the Canadian operating environment is really disadvantaged compared to what we're seeing in the United States. And so, we didn't wake up one morning and say, aha, we're out. It was just a process over time that has taken us to where we are today.
Given the challenges we have in this country right now for the oil patch, were you surprised to hear that Imperial was going ahead with deploying that kind of capital into this market?
I don't know if surprise is the right word. I think you put it in context. There's been billions and billions and billions and billions of dollars of projects that have been canceled. So that's the exception to the rule right now. I think everyone who's looking at the Canadian operating environment as a general rule is saying it is disadvantaged compared to the United States. And that doesn't mean everything in Canada, nothing in Canada compete, but as a general rule, most things are having problems.
Now we have a fall fiscal update coming, and just couple weeks from the federal government. Is there anything on your wish list that you'd like to see in there that can start to change the global community's impression of putting money to work here in this country?
So, again, as the CEO of Enerplus, we're pretty insulated from that. But I'm a Canadian, and as a Canadian, I guess the good news is there's a smorgasbord of choices the federal government could choose from to make things better. I mean, in fact, they could probably start by deciding they weren't going to make things worse. I mean, there's some regulatory processes at play, Bill C-69 amongst one of them. They're actually going to make the situation worse for companies in Canada, not just oil and gas companies. In terms of things that could really start to make it better, I think a lot of people are talking about taxation. The Canadian companies had an advantage relative to taxation, which they needed because of a lot of the other challenges. I think there's opportunities there to really hit productivity square on. But we've got a lot of things at play that we need to fix to make things better. They've got a lot of choices in front of them.
Obviously, one of them too, and a lot of provinces are fighting back now, is the plan of course, to price carbon, and there's a lot of opposition at the provincial level. What would be the outcome of that fight that you think would be most advantageous for Canadian business and for the patch?
Well, I mean, I think having an environmental plan, having a climate plan makes all the sense in the world, but it has to make sense. You have to think about it in the context of ensuring that your industry can compete, that jobs exist for people. And so I think many people, the provinces as well, are saying this plan doesn't make sense. It's actually not going to accomplish any goals relative to the climate, and it's just going to disadvantage Canadian companies, which means fewer jobs. And you look around the world, nobody is doing this. So any kind of plan has to ensure that our companies can be competitive. And I think that's largely what the provinces are saying.
Now, if Enerplus had several billion burning a hole in its pocket right now, what would it take for you to want to deploy that cash into Canada? What changes would you need to see?
I'd say a couple of things. So you look at the assets we have today, you look at the opportunities that we have, our single biggest projects in the United States, and that's what's going to attract our capital. As you think about expansion and those sorts of things, it's a pretty difficult market to be thinking about M&A. We told people this morning we're pretty interested in buying our shares back because we actually see a compelling opportunity buying our shares. For people to think about deploying capital into Canada, I think you're looking for things to start to get better, and that really hasn't been the pattern. It's been getting worse. Now, I suppose as a Canadian, I'm actually somewhat encouraged that people are starting to recognize the crisis that really does exist in the oil markets and the gas markets in Canada. I mean, you can see it. You can see it in the local prices that are just. It really is a crisis, and so at least people are recognizing that. But it's going to take some. There's no easy solutions. I think it's going to take some federal leadership, and it might take some provincial potentially some provincial leadership as well to start to move this thing in the right direction.
All right, Ian. As always, thank you for your time.
Appreciate it. Have a good day.
That was Ian Dundas, CEO of Enerplus.